Ladies and gentlemen, good day and welcome to Angel One Limited Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Hitul Gutka from Angel One Limited. Thank you, and over to you, sir.
Good morning and welcome everyone. Thank you for joining us today to discuss Angel One's Q2 FY24 financial and business performance. The recording of today's earnings call and transcript will be uploaded on our website under the Investor Relations section. The financial results, investor presentation, and the press release are also available on the website. For today's call, Angel One is represented by Dinesh Thakkar, Chairman and Managing Director, Vineet Agrawal, CFO. We also have the senior leadership team of Angel One, along with SGA, our IR consultants. The leadership team will give you a brief overview of the operational and financial performance of the quarter gone by, followed by a Q&A session. Please note, there may be certain forward-looking statements during the call, which must be viewed in aggregate with the risks that the company faces. With this brief introduction, I now invite Mr. Dinesh Thakkar for his opening remarks.
Thank you, Hitul. Good morning, everyone. I'm happy to share that Q2 FY24 reflects the superior execution of Angel One's robust growth strategies as we continue to gain market share across various parameters. I will take you through some of the company's key development and leave you with a summary of our plans for next few quarters. After which, Vineet will walk you through our financial performance. Seamless and superior client experience on our digital platform is the bedrock of company's growth. To maintain this growth in digital era, we must always prioritize our clients' needs and keep current with the rapid pace of technological and product development. During the quarter, we rolled out enhancement across the Super App, which led to further improvement in our overall NPS. I am happy to share that we continue to innovate and offer our clients some of the industry's leading features across all offerings on our platform. We have focused specially on simplifying the onboarding process for both new to market and experienced clients, thus giving them a superior experience of our tech capabilities right from the first point of contact with our Super App. The success of this approach is evident from our improved ranking amongst the top 10 club of free finance app on Play Store and our third place ranking on iPad. Since majority of our clients are digital natives hailing from tier 2 cities and beyond, who are new to market, it is imperative we create journeys that are user-friendly, compelling, and easy to follow as we handle them through their initial experience of our products. For example, through Trade Buddy within the Super App, we present a platform from which these new investors can embark on their first trading journey. This feature, compiled by influencers within a diverse customer cohort, offers a repository of curated educational videos in regional languages, which leads to better acceptance and motivation to consume such content. Moreover, to encourage and help young people to invest systematically and build their lifetime wealth, we have deployed and released the Stock SIP feature. Over the course of the year, we will roll out several more exciting features such as market open interest analytics, global indices, and stock discovery. This will further simplify our clients' investing and trading journey. Our endeavor to develop a lifelong relationship with our clients through a comprehensive digital financial services playbook has reaped handsome dividends. evident in the steady uptick of unique SIP registered through our app. With over 725,000 unique SIP registered in Q2 FY24, we continue to remain India's second largest player in terms of incremental registered SIPs. Furthermore, we are systematically broadening our financial services offering with plans to close the financial life cycle loop of our clients by distributing consumer credit products on our digital platforms in the upcoming quarter. We are currently building the platform and integrating our lending partners. We are also developing data-driven intelligence across customers' credit profile to help lenders' underwriting process. With such a large client pool, we have access to a large quantum of data. We are harnessing the power of data by building predictive models driven by deep learning of our clients' behavioral pattern to further elevate the client's experience on our platform. These models are integrated in our system using AI/ML techniques to craft hyper-personalized journey, ultimately enhancing client satisfaction and delight. We have developed significant pivotal strategies to augment our decision-making process based on this advanced insights and forecasts, which has enabled us to adapt quickly to changing market conditions. We are investing in AI-led personalization to enhance user discovery on our super app. We are also working towards incorporating the recommendation of Data Protection Act to the extent notified to ensure greater security and consent framework for our clients. As mentioned in our Q1 FY24 earnings call, we rolled out our brand campaign to enhance awareness of our full-stack fintech platform to address all our clients' financial needs and aspirations. The reception of this platform has been a resounding success, as we have noted through our brand track exercise. During the quarter, we onboarded Nishant Jain as our Chief Business Officer for Assisted Business. He was pivotal in scaling up the online ordering business of Zomato and growing the merchant network of BharatPe. Nishant has also held senior leadership position at Coca-Cola and PepsiCo. Nishant's experience in building large-scale franchisee will help formulate alliance with essential stakeholders and enhance business performance through a strategic growth of our assisted business. Here we plan to diversify and become a multi-channel business as we build an ecosystem that offers a full suite of financial products on our platform. We will leverage the huge data set and our digital capabilities to empower our partners to serve a wider client base. We plan to further augment our NXT platform as we integrate more features based on data, thus enabling our partners to have a more integrated approach to growth. Through this medium, we will be able to connect and positively influence a large underserved segment of country's population. I am also happy to introduce Ravish Sinha, who has taken over the reins as CPTO. Ravish has a remarkable track record spanning over 2 decades. He held senior leadership positions in cutting-edge technology companies such as Flipkart and Yahoo. Ravish will drive the delivery of Angel's product vision, strategy, design, engineering, and cross-functional influence. During the quarter, the board approved our business restructuring plan, which includes the proposed move of our broking business under our direct and assisted channel to our wholly owned subsidiaries, Angel Crest Limited and Angel Securities Limited, respectively. By doing this, Angel One Group will have a more focused and efficient organizational structure, and each business will have better flexibility and independence to foster growth and become a leader under their respective segments. As Angel One will be a flagship company, it will continue to house the super app, tech infrastructure and development, product development, data analytics, and other business support functions. Since all the companies are wholly owned subsidiaries, there will be no negative impact on financial performance of the company. In Q2 FY24, we moved ahead with filing of final approval of our AMC business. We are progressing rapidly in setting up the business infrastructure, and building the team, and are continuously engaged with regulators on this regard. It gives me great pleasure to share with you that our organizational culture is being well recognized. We have now been listed amongst the top 100 best companies to work for in India, both for women and millennials, a recognition given to us by the Great Place to Work Institute. This fortifies our commitment to develop a safe and secure workplace for everyone. I am delighted to share with you that our operational performance in Q2 FY24 has been historic. We acquired over 2 million customers in Q2 FY24, which is our lifetime best, thus growing our client base to over 17 million as of September 2023. This growth has advanced our share of India's incremental and total demat account to 22% and 13.2% respectively. Our orders, a key revenue driver of our business, grew by robust 36% sequentially to over 338 million, again marking our lifetime best. The ADTO generated on our platform continued to be in an uptrend, growing by 30% quarter-on-quarter to nearly rupees 30 trillion as we continue to gain market share in overall retail equity turnover by 168 bps quarter-on-quarter to 26.2%. In H1 FY24, we acquired over 3.4 million clients and reported nearly 587 million orders executed on our platform, which is 73% and 63% respectively of FY22 performance. I hope these insights have given you a flavor of our tech-driven business model and our growth strategy to become a more integrated financial service play. Vinit will now take you through our financial performance, after which we will be happy to answer your questions. Vinit, over to you.
Thank you, Dinesh Bhai, and good morning, everyone. As highlighted by Dinesh Bhai, Q2 of FY24 has been a very strong quarter for us as we present our historic best performance across both operational and financial parameters. Our quarterly total gross revenues exceeded the rupees 10 billion mark for the first time during Q2 of financial year 24. This was driven by robust market conditions coupled with amplified client activity, as seen from our historic best average daily turnovers, average daily orders, which grew by 29.7% sequentially to 5.4 million, taking our aggregate orders to 338 million in Q2 FY24. Notwithstanding that there were 5% more trading days in Q2 of FY24 when compared to Q1 of FY24, our gross broking revenue grew by 30.4% quarter-on-quarter to nearly rupees 7.3 billion, accounting for about 69% of our total gross revenues for Q2 of FY24. F&O continues to drive our gross broking revenue, contributing 85% in Q2 of FY24, while the share of cash and commodity segments remained stable at 11% and 4% respectively. Since majority of our clients are under the direct channel, their share in our net broking revenues stood at approximately 78%, and the balance 22% was contributed by clients acquired through our assisted business. As clients continue to transact on our platform, their contribution to revenues remain robust. Share of more than 2-year-old clients steadily increased to 46% in Q2 from 25% in Q2 of FY22. The longevity of these young, new to the market, revenue generating clients on the platform is further being fortified through our various initiatives, developments and offerings across the entire spectrum of Angel One's Super App platform. It is noteworthy that we continue to witness healthy revenue progression as clients become more attuned to our platform. I would like to emphasize that our cohort level data remains exceptionally robust. The most recent data regarding broking revenue from clients entering their second, third and fourth years shows strong performance at 85%, 80% and 63% respectively of their first year revenue. When we apply this updated behavioral data to our client set acquired in FY22, Their 3-year estimated revenue to cost of acquisition continues to remain very robust at 7.9 times. This reinforces the strong unit economics underlying our business. Interest income, which includes interest earned from our client funding book and from deposits with exchanges, grew by approximately 25% quarter-on-quarter to rupees 1.8 billion. This accounted for 17% of total gross revenues in Q2 of FY24. The ancillary transaction income linked to the turnover clients do on our platform stood at approximately 0.9 billion, accounting for nearly 9% of Q2 FY24 total gross revenues. Finance cost was higher by 44% quarter-on-quarter to rupees 264 million in Q2 of FY24 on account of higher average borrowings for the period in line with higher client funding book. Q2 of FY24 finance cost also includes the impact of higher borrowings for substituting the underlying collateral for bank guarantees with own funds towards margins with clearing corporation pursuant to the SEBI circular discontinuing any client funds as collaterals for bank guarantees. Employee benefit expenses, including ESOP cost at 1.3 billion rupees in Q2 of FY24 was higher sequentially due to increase in our headcount and related hiring spends. Other OPEX for the quarter of over rupees 2.6 billion grew in line with our operations driven by spends on higher client acquisition, their one-time onboarding costs, operating expenses towards tech infrastructure, demat charges, CSR and other expenses. Our consolidated operating margin for the quarter stood at 51.3% versus 48.6% in Q1 of FY24. 26% increase in depreciation and amortization costs to rupees 112 million in Q2 of FY24 was on account of the commissioning of our disaster recovery site at Chennai. Our consolidated profit after tax from continuing operations grew 37.9% quarter-on-quarter from rupees 2.2 billion in Q1 to over rupees 3 billion in Q2 of FY24. For Q2 FY24, the board has approved a distribution of 35% of post-tax profits as second interim dividend to the shareholders, aggregating to rupees 1.06 billion, translating to rupees 12.7 per equity share. Our H1 FY24 total gross revenues and profit after tax stood at 18.6 billion and 5.3 billion respectively, representing a growth of 30.1% and 32.9% over the corresponding period last year. Period end cash and cash equivalent increased to rupees 76 billion on the back of increase in client margins. Period end client funding book grew to nearly rupees 19.5 billion compared to rupees 11.5 billion as of March 2023. Consolidated net worth of the company grew to rupees 26.1 billion. As we continue to operate the business within our desired margin profile, our H1 FY24 annualized return on average equity remains healthy at 44%. With this, I conclude the presentation and open the floor for further discussion. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Swarnabh Mukherjee from B&K Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. Hope I'm audible.
Yes, sir.
Yeah. So first of all, I would like to congratulate all of you for the strong performance that you have recorded. Now coming to questions, first question is on the assisted part of the business. So in slide 6, you have given some color on what is the plan, but I request you to give it in a little bit more granular and maybe qualitative manner so that we can understand what this part of the journey of the business is expected from this part. And given that you have mentioned, involvement of leading DSAs and mutual fund distributors, so are we eventually going to mold this part of business into a national distributor kind of a model? And will retail be our core focus areas, or are we going to kind of move up the scale and target HNIs as well? So that is the first question. Secondly, sir, also wanted to understand a couple of things on the recent business performance. First of all, the strong increase in the number of orders that we are recording per day. So what would be the reasons, if you could break it down? So apart from the fact that the overall market remains buoyant, how is activation of new customers going on, whether that is resulting in this, or in BAC also ramping up in volumes? I mean, similar levers, if you could point out in a little bit more detail on that. And thirdly, related to the customer acquisition, wanted to understand the strong growth we are seeing, how would be the contribution of the AP channel related to that, and the NSE directive that had come up, where we are standing on that. So these are my three questions.
So, Mr. Mukherjee, what I understand, your first question was on assisted channels. So I will ask Nishant to answer that part.
Yeah, thanks for your question, Dr. Let me kind of paint a picture which may help you kind of decipher what one is intending to do. Today, if you look at our existing scenario, we are primarily centered around a single channel of acquisition, which is sub-brokers, and primarily in the equity F&O play. Now, if one was to zoom out, what you would see is that there are limitless possibilities and a lot of opportunity for partnerships which exist if one was to kind of look at tie-ups with fintechs, various health tech players, banks. Even if you look at certain other channels, for example, the mutual fund distributors or the POSPs or the DSAs, if one was able to kind of provide a good product market fit and kind of cater to the niche that they exist in, perhaps there are a lot of synergies that could be built out. So the idea of assisted business is therefore to have a multi-channel, multi-product play and be able to eventually build a funnel through which we cross-sell our anchor products at a certain point in time, with the end objective being creating a Angel One equivalent size in the next 3 to 5 years within assisted business.
Okay, Mr. Mukherjee, I was unable to get your second part of the question. Can you repeat that?
Yeah, so second part on the assisted business was that once we embark on the plan, and thank you, Nishant, for giving this color. So once we embark on this plan, will it kind of center around our existing customer, I mean the kind of customers we tap into right now, say younger customers, and I think an increasing mix towards tier 2, tier 3 customers, or shall we also kind of gravitate towards maybe more higher ticket customers and be more, act like more a wealth outfit in the making? So that was, I think, my second part of the question on the assisted sales.
Yeah, so like now target audience that we'll be targeting would be much beyond broking. As Nishant said, that we would be looking at distribution channels where we can serve lots of other products like insurance, mutual fund, lending product, and even that will include lots of kind of like wealth management kind of like product. So overall, the kind of a market we are looking at is much beyond that what we were catering to previously.
And just to add to what Dinesh mentioned, see, we are looking at various customer cohorts. So the idea is not to cater to, not to have a singular strategy for the entire spectrum. The idea is to create customer personas, create customer cohorts, and be able to serve them basis what they require. And therefore, to your question, answer would be that yes, we would be serving different other segments as well, over and beyond what we currently do. And that's the whole idea of creating a wider play field.
Understood. This is very helpful. Thanks. So, sir, on the other couple of questions.
Thank you. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. Good morning, everyone, and congratulations on a great set of numbers. So, firstly, on the interest cost, you mentioned that there is some impact of the upstreaming element. Then the margin trade funding book was also higher. But if I look at the interest cost, that's just gone up by 8 crores, and you had mentioned earlier that around 40 crore impact would be there for 9 months just because of upstreaming. So that itself would entail around 12-13 crores of incremental cost for the quarter. That is my first question. Could you triangulate that for me as to how should we look at this interest cost for this quarter and going ahead? Second is, we've seen a very sharp ramp up in customer acquisition in this quarter. So what really has changed, and what kind of momentum or things should we look at going ahead? And I think the previous question was also about one of the elements which was unanswered was with regards to the volumes that came in as per day per customer. Volumes have also been rising. So what is the kind of trajectory that we are looking at? And lastly, you've set up a new subsidiary for wealth management. What is that exactly? And whether the distribution is going to be sitting in this company, how are you going to distribute the business of APs or online of distribution business? Will it be housed under this subsidiary, or how it's going to pan out? Could you lay that out for us? Those will be my 3 questions. Thank you.
Sure. So I will answer rest of the question. Interest cost Vince will take that later.
Okay,
so on sharp ramp up of retail acquisition customers and all that, that is attributed to our shifting from old app to new super app, which has better journeys, and it has lots of areas where customers are able to really and when they look at the broking services, they're finding it easy to use our app and be engaged with our app. So based on that improvisation in journeys and all that, we have seen a huge ramp up in NPS and all that, which clearly shows that people are liking our app. And there is always a referral word of mouth in our market, because this market is nowadays, because of social media and all that, it's easy to understand that this app is better and people refer each other. So that is one of the reasons. And second reason would be that last quarter, as we said, that we'll be spending on our branding exercise so that people know what kind of this shift we have done from single broking app to this latest app. So that has also helped us. And plus, we had spent more this time on acquiring customers, keeping in mind unit-wise economy, but we were able to optimize our marketing, our acquisition through different channels. That's the reason I would say it is combination of all these factors that we saw ramp up in customer acquisition. In terms of volumes, again, credit will go to journeys that we have built. We are able to engage customers. We are able to monitor customers' journey. And we were able to build a good data science team who is helping us in terms of giving us some information about customer, their profile, what they will like, and how they'll get engaged more. If you look at when we introduced this SIP journey, that has helped us for customers not only to buy one more product, but this customer is engaged for one more product. That gives us more time with customer and our app. And your question on this wealth management, the total solution is not a distribution business. We would be creating lots of solutions for HNI, and we would like to go into a ticket size, which has been challenging in the market, how to serve a ticket size of 50 lakh, 1 crore and around that area. If you look at wealth management across market, they are focused more on 5 crore, 10 crore and above. But we believe that kind of like technology capabilities that we have and data science tools that we are using now, we can bring to this market kind of like very effective product which is effective for HNIs and ultra HNIs, and give this kind of like solution to even people who want to just invest 50 lakh and 1 crore. So that is a target for this wealth management. We will start in a normal way, serving HNIs and all that with proper solution, but we'll move towards using technology and bringing this cost of acquiring customer with this ticket size of 50 lakh and 1 crore lower and make them profitable. So for other businesses like for product-based solutions, we have AMC and all that. So that will complete our approach in terms of wealth management. On interest part, I will request Vinit to answer that.
Sure. Good morning, Prayesh. On the interest increase, so when we gave a guidance of 40 crores for the 9 months, it was based on the assumption that the bank guarantees for client denominated funds will scale down gradually, and that's what has happened. From 1st of May 2023 to 30th of September, the scaling down has been gradual, and therefore the cost will not be linear. Now that the client denominated bank guarantees have completely gone, so the cost will be higher for this quarter and the quarter after that.
So just Vinit, further extending that point, you mentioned, so this quarter still, even if I assume that you have a very limited portion of that 40 crores, let's assume it's around 5 crores. Okay, so the total cost has gone up by 8 crores only, where your funding book has gone up, your borrowings on the balance sheet has gone up. So somehow I'm not able to, unless your costs have, your borrowing costs have gone down materially. I'm just trying to understand as to what really kind of brought that, the increase was so less.
Yeah. So the funding book has not gone up for the entire quarter. It's towards the second half of the quarter that the funding book has grown. So if you see, the average is about 14.5, 15 million or so. So when you see the period end book, then obviously it's 19.5 billion as compared to 11.5 at the start of the year. So it's not a sudden increase that has happened at the start of the quarter, and therefore the borrowing has also increased in proportion to that. What you see in the balance sheet is the period end number. It's not the average borrowing that is seen.
So is it fair to assume that out of that 40 crores what you mentioned, a good portion of, let's assume around 35 crores is still is yet to come? Or would you want to change that number or 40 crores to a lower number?
No, I'll maintain that 40 crores because there is growth in business, and therefore, there will be requirement of margins to be placed with the exchanges. So we would continue to maintain that guidance of about 40 crores or so for the for this financial year.
Okay. And just a follow-up on acquisition cost you've been mentioning, customer acquisition cost. If I just divide the total admin cost and the number of acquisitions that made, it used to be around 1,500 rupees per customer till for the past 3 quarters. It's coming at 1,250. Obviously, the base is much better because of 1.3 million was the run rate and 2.1 million is now. But is there anything else to read into it, whether the customer acquisition cost trajectory and this momentum would continue?
So the admin cost is not directly for the cost of acquisition. There are other elements as well, including the operation cost towards tech infrastructure, the branding cost that is incurred, the onboarding cost that is there. So, you cannot directly divide the number with the number of clients that were required. The customer acquisition costs have not moved significantly. It's in the same line as it was earlier. As you know, we don't disclose the numbers, so I'll leave it at that.
Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We'll take the next question from the line of Chintan Seth from Girik Capital. Please go ahead.
Thank you for the opportunity. Am I audible?
Yeah, audible.
Yeah. So two set of questions. One is on a bit harping on the orders, per client order and all. If you give us some color on, the trading sequence between a mature client versus new client, as you already mentioned in your opening remark that the mature 2-year-older customer cohort is contributing more to our net booking revenue. If you can provide a color on how the mature client trade for day order or quarterly orders versus a new client, it gives some color that more business is coming. Obviously, intuitively, it looks like more business is coming, but how skewed it would be, that I would like to understand, and what kind of risk you foresee in terms of these orders softening down from the mature. Any thought process or any concern you have that this order might taper down in the upcoming future? That would be the question. And second, on the cost side, you did mention that we are in line with what we are spending right now. I believe there will be some thought process in terms of number of customer onboarding at a aggregate level, either be it share in the overall demat account in the country, and post which the need for spending more towards client acquisition will start to decline. So any thought process around that, where the inflection point will come, or the target that you have internally worked out from that point onwards, the need for investing for client acquisition will start to taper off. If you can provide that understanding. That these are the two sets of questions. Thanks.
Yeah, Chintan, what you are looking at, very granular kind of detail, the thing that we don't provide. What we provide, it is in our presentation, slide 11. I will ask our revenue officer, Devendra, to touch upon that. But before that, let me just cover on cost side and all that. Right now, it's very difficult to say what impact this thing kind of we'll be seeing in cost in near future. Because what we are seeing, unit-wise economy has been very profitable. So we try to spend based on our own kind of metrics that we have, which is a bit proprietary to us in terms of how much we should be spending. So when we see there is a good opportunity to acquire customers which are profitable, we try to press that lever. So overall, I can say, looking at under-penetration, this trend seems to be will continue for a long time, because India, if you see, hardly 3 to 3.5% people are active in this asset class. So
correct.
If you look at the performance of this asset has been excellent. So I don't feel that there would be any kind of phase where clients would not look at this market for building their wealth or creating a second income. So I would ask Devendra to touch upon whatever data I can provide in terms of client per order cohorts and all that. Devendra?
Sure.
Yeah, hi Chintan. From an overall point of view, if you look at orders from a mature clients and new clients point of view, I think, am I audible?
Yes, Devendra. Yeah, please.
So, from a mature and new client point of view, as Dinesh has already mentioned, that I think we came out with new journeys on the app which simplified usage for the active users particularly, where now option watchlist has come out. And also for the new users, we have been building up new journeys. Trade Buddy is one of the products that we had come out. So obviously we have improved the journeys of new users and active users very robustly on the app. And we have also used data science to customize it for different profiles of clients, which has come out really, really well in terms of the eventual order that you see on the platform. Obviously, this is also supported by two major factors like markets going to all-time high, and also multiple expiry days, which provides more opportunity for active traders to participate in multiple days. So this has also added on in terms of active participation of active users particularly very, very strongly. But if you look at from a mature and new clients point of view, we see this impact has come equally on both fronts. We have seen equal impact on mature users, which is very high active users, as well as new users which are starting to come into the market and start experiencing different financial equity services in the app itself. So these are the two prime reasons that we have seen within the system, which has helped in terms of growing the orders.
So repeat orders, I believe, will be, based on the income they generate from trades, right? And given market is also supporting to some extent the kind of ordering we are seeing right now, looks like to follow through, to continue. But what are from the Angel's point of view, the kind of information and the kind of features you are providing? Whether if you can give us how profitable this newer or mature cohorts independently, whether they are making money, which brings them back to the trading activities. Is it what we are seeing currently, or any risk, anything different you are reading there?
See, Chintan, let me take this question one sec.
Yes.
This market ups and down is not a new phenomenon.
Correct.
There from the day stock market was incorporated.
Right.
If you look at already we share that kind of data, what kind of repeat business we get on year 1, year 2, year 3. So
right.
We have to look at cohort-wise revenue, whether it continues or not. Whether we look
Correct.
at dot-com bubble era or we look at global financial crisis era. We have seen market really going to a zone where investor traders lost money, but because
Correct.
they come to the market with limited risk capital. So because they are earning, they are generating kind of revenue. So they are kind of engaged in the market, not that they just do trade, they make loss and they shy away from the market. So based on kind of an historical trend, we have analyzed that trend in this digital era is far better in terms of repeat order. Because when they download an app stays with them. So whenever they see an opportunity in the market, they may feel that, okay, when they entered, that time opportunity was not good and they made some losses. But they go back to nowadays, like social media, try to see what's the right approach, where they went wrong, do some back testing, and again they're active in the market.
Correct. Okay. So the behavior has changed, and the kind of the ease of accessing the trading data and app through an app is helping them to to come back to the market and be
access to information, access to experts what we have built, Trade Buddy and all that, talking to community and trying to evolve, understand. So all said and done, market has given good performance. They have realized it is their mistake, so they have to improvise on that. So this generation that way is very proactive in terms of gaining knowledge and all that.
Got it. I'll join back in. Thanks for the insight.
Thank you.
Thank you. We'll take the next question from the line of Bhuvnesh Garg from Investec Capital. Please go ahead.
Yeah. Thank you for the opportunity and congratulations for a very good set of numbers. Sir, a couple of questions on your new businesses. Firstly, on the lending products distribution. We just want to understand that what would be your role in the partnership that you had mentioned in the presentation, that through AI and ML models you would be creating profiles of your customer, and just want to understand what would be your role in that partnership and what type of products that you will be offering through lending platform. So yeah, that's my question.
Yeah, sure. So Saurabh heads over this new business division. So I will ask Saurabh to answer this.
Hi, Bhunesh. In terms of the product that we'll be offering, to begin with, it will be consumer personal loans, unsecured consumer personal loans, and the kind of partnership that we'll be having with the lending banks or NBFCs will largely be in the capacity of a distributor. But we don't want to intend to just be a vanilla distributor. We want to give all the intelligence that we can to our lending partners to help them underwrite better, to help them collect better, so that their portfolio performance increases, and which in effect will mean we can also benefit from better commissions from them over time.
Got it. And sir, any particular targets we have in this lending space in terms of AUM or in terms of revenue where we want to reach over next 3 years?
So actually we can't give out that number, but we have very steep aspirations with respect to the credit business. We'll start slow to ensure that we have delivered the best experience to our customers and scale significantly post that. There is tremendous potential to grow the retail credit business in India.
Got it. And so second question is on our wealth management business. So if I heard it correctly, you said that you will be targeting customers in 1 to 10 crore ticket size, right? Is that correct?
No, let me just start that. See, today if you look at wealth management business now, like it is mostly focused on HNI and ultra HNI, where average ticket size is 5 crores and above. So we'll start our journey because expertise lies with people who are managing fund at this ticket size. But we believe Angel has a unique capability.
Ladies and gentlemen, the management's line has been disconnected. Mr. Dinesh Thakkar, kindly stay connected while we try to reconnect them. Ladies and gentlemen, the line for Mr. Dinesh Thakkar has been connected. Over to you, sir.
Yeah, sorry, Bhupnesh, for this. So what I was trying to say that this wealth management piece currently is served for only HNI, ultra HNI in a very effective way, what we call where they are able to handle wealth in a right perspective. But if you look at India, India is market where actually we must be able to give similar kind of solution and wisdom to lower ticket size, like 50 lakh, 1 crore kind of ticket size. So we would like to use the same kind of like solutions what is provided by good wealth managers, use our technological capabilities, use data science, so that we are able to have an access at a lower cost, give solution at a lower cost. So plan would be to start as a proper traditional wealth management business, but try to use our technology and data science people so that we are able to serve a lower ticket size, middle valley, which is growing at a rapid speed.
Got it. Understood. And sir, any particular targets we have for wealth management over next 3 years?
No, I think we are expecting that we'll make kind of like more announcements by last quarter of this financial year. Until now, we have just formulated our ideas and what we want to do, but we have to really get into the market to create a proper content strategy and how to go to market and all that.
Got it. Got it.
So you can expect an announcement from us maybe by the last quarter of this financial year.
Got it. Thank you, sir, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Sanket Godha from Avendus Spark. Please go ahead.
Thank you for the opportunity. So the first question is on some data keeping questions. Basically, given the other OPEX has grown significantly year on year in the current year, so just if you can give how much was.
I was unable to understand your voice was getting cracked. Please, can you repeat it?
The question I was asking, sir, was that given we have seen a strong growth in other OPEX in the current year, just wondering. We believe the large part of the growth could be driven by advertisement expense. So can you just highlight how much we have spent on those advertisements and then how sustainable it is going ahead? That's point number one. On the data keeping, I have two more questions. One is if you can break down that 8 crore expense increase in the interest, can we safely assume it is largely because of the changes with respect to upstreaming of the client money or bank guarantee not available? And lastly, given the chairman has spoken about instantaneous settlement, just wanted to understand the impact on us if the float income or what kind of float income we earn on the client money, which could potentially disappear if instantaneous settlement gets implemented? That's on data keeping. I have a couple of questions on authorized channel, assisted channel. Maybe after you answer this, I can ask that one.
Sure. Dinesh, can you take all these 3 questions?
Yeah. So about the cost that we've incurred on branding, we don't disclose that, Sanket. So it's built in the other expenses. As I said, majority of the expenses, increase in the expenses towards other expenses has been because of the growth in the client acquisition, from 1.3 million to 2.1 million, plus the onboarding cost. And there is the cost that we've incurred for the branding campaigns that we've run during the quarter. That's on the other expenses part. On the interest, again, I mean, I'm sorry I can't disclose much details beyond the data that we've shared. But as I said, the increase in the margin requirement will go up with the client-denominated margins, bank guarantees getting abolished from 30th of September. So there will be this incremental cost on the borrowing and the BGs for the next 2 quarters. We've given a guidance for 40 crores during the 9 months till 31st of March, and we maintain that.
And lastly, Vinit, on the float income on client money?
Well, that's something which will pan out during the in the future. Right now, we have already shared a lot of information about the kind of income that we generate from clients' margins, etc. But as and when the instant settlement gets implemented, we'll see how the margins move, and then we'll be able to give a guidance on that.
Okay, perfect. Sir, the second question which I had was on the authorized channel or assisted channel model. Given we have been incrementally focusing on this business, to the extent I understand, this is a pass-through model. Suppose if you are earning 100 rupees by distributing a loan or a mutual fund or doing any product on financial or insurance in that sense. So if you are earning 100 rupees, probably you need to pay 90 or 95 to the authorized person, and 5 rupees is what you might retain. So they just wanted to understand how exactly you are going to build this model, and if I look at this model in silo, then is it safe to assume that the EBITDA margins of this business will be invariably lower compared to what you do in the direct business model right now?
Yes, I think you have to look at this model in a different way, because when we talk about margins and all that, we don't take the cost. So that cost is taken by our assisted channel business partner and all that. So that way, this model is very profitable and very kind of helpful in terms of cyclical times and all that. Because all cost is taken by our business partner. So what we bring on the table is affiliation with good manufacturers, where because of scale, we are able to negotiate a better price. Second, we are able to use solutions that we have, and we can customize to the level where our business partner will be able to serve their customer better using our AI/ML tool and data science that we apply in our platform. So we bring in a lot more than just giving an access to some manufacturer. But when it comes to managing customers' asset, portfolios, distribution, understanding, being more intelligent in terms of understanding asset allocation, that is where our USP comes in. That is where a platform like NXT and this are used, so that this assisted business partner is able to acquire more customer at a lower price. He is able to get more creative material in terms of communicating with the customer and acquiring more. And when it comes to serving also, we are able to tell him what are the product in the market and how each and every individual's portfolio is performing. So that's a huge support which channel partner gets. Nishant, if you want to add anything on this.
Sir, just a follow-up on that. Means given in our broking business, to the extent I understand, it is 70/30 sharing. So do you expect that 70/30 sharing to operate in this other products also, or it will be different meaningfully from what we experience in broking business?
So every business, one second, Nishan. So that every business model is derived by what kind of an investment we are doing and what is an ROE to that. So what we look at any business where there's a huge opportunity of deploying our kind of like OPEX or CAPEX, which generates reasonable, good, decent kind of like returns, and it is scalable. So we would like to focus on that. Margin is not that important. 70/30, it can be 50/50, it can be 90/10. But what is important is that what is the scale of that business and what we are bringing on the table, and what kinds of returns we'll get on investment we are doing. So I feel because all these businesses does not require huge capital, so ultimately it boils to business which is more sustainable, because when we acquire this business partners, they are in the market for, like, we have seen our business partners being in the market for like 10, 20 years. And plus whatever margins we share with them, ratio is such that we both are profitable. So in that sense, it is not less profitable. It is kind of a thing which is required to gain more market share in whichever business we get into, to have a kind of like diversity in terms of acquiring customer from whichever channel they want to use our service. So objective of being into assistant business, the thing is much wider than just looking at margins. So I believe that India is still, like, there are digital natives. There are people who want assistance. And those who want assistance is also a big market. Yeah. Combined with technology platform, what we can give now, it can create a very unique USP. Yeah, Nishan.
Yeah, so just building on what you just said, sir. There is a role that channel plays, and the role that is that acquiring customers and bringing them onto our fold is primarily what they are focused around. And what the role that we as service providers play would be kind of creating those products, creating those customizations to be able to cater to that specific need. And therefore, both the parties involved are adding value, and therefore they are being reimbursed or they are able to charge for the value that they create. I think I would like to look at it from this perspective and not from a margin sharing perspective.
Got it. Perfect. And last one.
I can give you a specific example for that matter to kind of help you internalize this point. Let's say, as far as the lending model is concerned, and let's say if I was to tomorrow time with the DSAs of the world, and I play a role of a LSP, a loan service provider. Now, in a scenario where I help them identify a specific cohort where we are able to charge a specific rate of interest, and therefore creating enough lubrication in the system for them to be able to charge their DSA fee, which they in any case would be getting, and on top of which I am able to add value by that specific cohort and fulfillment of those journeys, and therefore I am able to bring in my margin. It could be in form of LSP fee, or it could be in form of upfront onboarding fee. So these are different value adds that one is creating, and the overall proposition therefore becomes more robust.
Got it, sir. Perfect. And lastly, given you have raised on the lending point, just wanted to check that if the loan market you want to get into, whether ultimately you will even start a payment aggregator model where the throughput through your channel will be significant, and therefore the personal loan disbursement thing can be meaningful, or you want to be a pure DSA or a aggregator of the DSAs kind of a model?
Well, this is a wider question, and I would request Dinesh ji to respond on this.
Yeah. So we would always like to be a distributor of this product. We see a big opportunity in lending. If you look at lending market currently now, so like what is missing is last mile kind of like approach to end customer who are into remote areas and all that. And when you look at digital native young people, they want to consume everything on digital platform. So we would not like to underwrite risk and all that where we don't have competency. Our competency lies in creating an access to the market, creating a huge distribution network, and co-sharing that kind of revenues with our manufacturers who are expert on risk management and collection and all that.
And regarding your payment aggregator question, see, I mean, there are different signals that different companies use for underwriting purposes. Now, given that we are not necessarily into the underwriting part, I am not sure if that is the signal we are using. I mean, payment aggregator using the transactions is able to underwrite the customer who's actually intending to borrow. So the perspective changes.
Got it. Perfect. Thank you very much. That's it from my side.
Thank you. A reminder to all the participants, anyone who wishes to ask questions may press star and 1. We'll take the next question from the line of Hardik Jain from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. So this expiry changes happened, I think, from the 1st of September. So if you can just give us the understanding how the volumes have moved up in the month of September versus August, because I think now it has become a regular feature and it will give us some kind of assessment how the volumes can move in this quarter also. So this is my first question. And sir, in terms of ancillary revenue, you said 90 crore is the kind of refund that we get because of our turnover. So I just want to understand, isn't it required by the regulation to charge on an actual basis to the client the turnover charges? So that is my second question. Secondly, sir, you have also mentioned that earlier we were not able to give Sensex futures and options on our system, which has started, which you mentioned in the presentation. So when did it start? Did it contribute something to the revenue in this quarter, or it started after the quarter? So yeah, this were my few questions, sir.
Yeah. So on expiry, we would not be able to comment much on that because this all changes which happened has been factored in our quarterly results. So you have to take some informed decision based on numbers that we have shared. And on charging the thing rate to customer, we charge as per slabs, and that is where there is kind of whatever is applicable to different traders based on that volume, we charge that. So it is in line with regulation. And third, BSE, we started just last week. Still, it is not fully rolled out. The impact of BSE is not fully seen in our this quarter result.
Okay. Thank you, sir.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead. Mr. Gupta?
Good afternoon.
Yes, sir.
Good afternoon, sir. Thanks a lot for taking my questions. I think most of them are already answered. Congratulations for a very good product. Nevertheless, one question that I had in my mind was on this unique SIP registered. So, this is certainly, reaching a very significant sort of a scale. So at the moment, have you had any sort of a discussions with the AMCs or you have some thoughts about how to monetize this thing? And also, given that you are also going to launch your own AMCs, do you see any play between these two, and how do you see any monetization overall to come up in this sort of a segment?
Yeah, so thank you for your questions. And if you look at our discussion, since few quarters, we were focused on Super App, and we strongly believe individual who comes on our platform, he should get everything which that person needs to achieve his financial goals and all that. So first step was after broking to introduce some other kind of asset class where we see some traction. So positive thing is that we were able to see people liked more services on the same platform. That's the reason we just launched in April. In 6 months, we are number 2 in terms of unique SIP registered. So that clearly shows that people who are on one app, they are ready to buy multiple services, multiple products, provided we are able to give a right journey. So that is where our uniqueness in terms of building a super app, building an engine which is more guided by data science and AI ML tool is very effective in terms of understanding what the customer wants and serving it at the right time. So we don't look at earning from every transaction. What we look at, that customer should be engaged on our app. If that person is engaged, today or tomorrow, they are going to consume more services on our platform. Some products can give us good revenue, some products may give less revenue, but overall, what is important? What is cost of acquisition and what is the lifetime value of this customer? So we believe until now, none of the industry has really focused on lifetime value, which is much beyond what we can imagine. So because we are acquiring customer who is of the age of 25, 26, if you look at their lifetime value, it will be much beyond than what we are currently projecting. So today, if you look at we have given numbers on that, our cost of acquisition to until now in 3 years, we are able to recover almost 8x from our cohort. But if you are able to add few more services, create more engagement, more stickiness, we believe that this parameter would have a positive impact. So that is where our focus is. Now your question on our own AMC, yes, we believe our AMC would be totally on passively managed fund. I believe that passively managed fund is a right product for young individuals who are starting their journey. One, because ETF is an easy product, diversified product, and it's easy to divide it into SIPs and invest regularly. So definitely being into passively managed fund, what is going to help us is our distribution network, which is huge. So that way there is a synergy, there is a kind of advantage position that we have, and we are going to leverage that.
Understood, sir. Thank you and all the best.
Thank you. Participants who wishes to ask questions may please press star and 1. We'll take the next question from the line of Varich Pangur from Pico Capital. Please go ahead.
Hello.
Yeah.
Yes, sir.
Sir, just wanted to ask on one thing. From 1st July, I think the lot size of Bank Nifty has reduced from 25 to 15. So is there an impact of that also, because a same trader would have to put in more number of orders for the same value that he is going to trade? And from that sense, would it be structural going forward as well? Because that number would remain same, right? From July, August, September to the coming months now on.
Bhavin, can you take this question?
Yes, sir. So, see, the Bank Nifty contracts has definitely changed from 25 to 15, but it has got actually added in the number of trades that we have been reporting till now. So, obviously, there are set of customers who would want to actually trade a particular quantity. For them, the number of orders would have gone accordingly. But to see whether this impact has actually caused the rise of orders would be, we will not be able to mention on that particular thing. But yes, there are certain customers who place orders based on number of lots. There are certain customers who place based on the number of quantities that they want to take. Yes.
Fair enough. Thank you. That answers my question. Thank you.
Thank you. We'll take the next question from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, I just wanted to understand on the ESOP cost, if we factored in these, we've had these new hirings, so what would be the cost we can factor in for the year?
Vinit, can you take this question?
Sure. So on the ESOP cost, the guidance remains the same. Overall for the year, we had estimated the cost to be about 80 crores. The cost for new ESOPs that we have granted and expect to grant will be in the range of about 55-60 crores. So we maintain that same guidance.
Right. And secondly, on the ad spend, I think you mentioned that, will that be ramping up now with the, these new businesses coming in, the loan business and the AMC? But do we see a further ramp up in that from the current run rate?
So for the lending business and other distribution businesses, we are actually not spending money to acquire those customers. We already have a large enough customer base internally who we could cross-sell and create a large enough portfolio there. So in terms of spending money to acquire customers this year and hence brand spend increasing, that won't happen.
Right. Thank you so much.
Thank you. The next question is from the line of Bhuvnesh Garg from Investor Capital. Please go ahead.
Sure. Thank you for the follow-up. So just a data keeping question. Firstly, if you can provide the interest rate that we charge on our MTF book, and secondly, if you can provide the breakup of our interest income into our MTF income and then FD interest income. Yeah, these two questions.
Vinit, please take this question.
Yeah, we charge 18% annual for the MTF lending that we do, and of the total interest income that we have reported, almost 65% is from the fixed deposits and margins that we place with the exchanges, and about 35% is from the margin trading.
Got it. Yeah, that's it. Thank you, sir.
Thank you. The next question is from the line of Ruchita Sharat Katke from iWealth Management LLP. Please go ahead.
Hello, sir. Good afternoon, and congratulations on a good set of numbers. So I wanted to ask, sir, when do we see this AMC, the lending and the wealth management business starting up? Sorry if I'm repeating the question. I must have missed it. So if you could just give a little clarity on that.
No, sure. No problem. On AMC and lending, I will ask Saurabh and Vinit to take this question. On wealth management, it is too early to comment anything on when it will start. So right now we are at a kind of like conceptualizing kind of stage. So maybe you will hear more about this wealth management in next quarter in detail. On AMC, Vinit, can you just elaborate? And on lending later on, then Saurabh can add.
On the AMC business, we've already filed the application for final approval early August. We are in the process of building up the business infrastructure and the tech infrastructure and creating partnerships with key vendors. We expect SEBI to conduct an on-site inspection once we are ready with the entire infrastructure and the team in place. And thereafter, usually it takes about between 1 to 2 quarters for SEBI to give their final approval. So most likely we should be able to, we endeavor to get our final approval either in the fourth quarter or early first quarter of the next financial year.
On the credit business side, most likely before the end of this fiscal, we should be able to go live.
Okay. Understood, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sumit Jankar, an individual investor. Please go ahead.
Thank you for providing me the opportunity. My question is related to ARPC. Can you provide the numbers for this quarter and previous quarter?
I'm not sure. Devendra, do we provide ARPC?
No, we do not provide this information, and this is internal information. So we don't provide any such information.
Okay. So I have one more question related to derivatives market share. As I can see, the derivative market share is all-time high. So can you mention some reasons which helped you to gain 26.2% market share in this quarter, which is up by almost 200 basis points as compared to previous quarter?
Devendra?
I think as mentioned earlier, we had a number of product journey improvements that we have done on the product front, which is helping the active users to engage in a much more wholesome way, which has started contributing in the right way in terms of participation. That has been the major impact where We have made sensible free, we have got basket order, we have got options. So there are multiple product journeys improvement that we have done, which is causing easier usage by users who are active users particularly. So that is what is majorly helping the overall movement of the derivative market share as well as a result.
Okay. I have one general question just to ask. As you have a good market share in derivatives, recently, 5-6 months ago, the SEBI made a report on derivatives profit and loss of retail customers. So it said that 89% clients make loss. And so, can you tell? So the derivatives is a zero-sum game. So is it that the remaining 10% are earning the losses made by 90%, or is it that the DIIs, FIIs, or banks who are also trading in derivatives, they are receiving the profit? So what is your take on this?
So Sumit, it's a good observation. I think report does not give detail about if 9 are losing. As you said, it's a zero-sum game, minus expenses. Where the other part is going, it can be going to people who are into kind of like arbitrage business or FIs who are hedging. But I think this report is not clearly mentioning that side. So I would not be we would not be the right person to answer this. You have to check with the regulator on that.
Okay. Thank you, sir, and congratulations for good set of numbers.
Thank you. Thank you very much.
Thank you. The next question is from the line of Hardik Jain from Whitestone Financial Advisors Private Limited.
Yes, just one bookkeeping question. So how much cash would we have on our books other than the client margin, so our own cash?
Vinit?
Today we deploy about 1,500-1,600 crores of our own cash other than the money that is there in long-term investments and assets. So this is the money that we deploy for margins and for the other working capital requirements.
Okay. Thank you, sir.
Thank you. The next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, so just wanted to understand on the loan business, would we be then targeting, since you said it's a cross-sell, more of the tier 2, tier 3 customers, and that would be pretty unique to us then?
What is the question, please?
Can you
the loan business, for the loan business, since you mentioned it's going to be more initially the cross-sell. So does that that implies that we will be having more tier 2, tier 3, and tier 4 kind of customers for that?
So since we are not acquiring customers for lending, we are cross-selling to our current base. So whatever the composition is of the base, that will be the composition of our lending business as well.
Right. So that's an area pretty much ignored by the current fintech players. So, I mean, in terms of credit risk.
That is where the opportunity lies, right? One, the market itself is underpenetrated, and more lenders and issuers want to enter that market. And since we have a very highly engaged base in those same geographies, we have a very high potential to capture that market.
Right. Thank you so much.
Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Dinesh Thakkar for closing comments. Over to you, sir.
Thank you for joining us on the call today. I hope we have been able to answer all your queries. Should you require any assistance, please feel free to get in touch with Hitul Gutka, Head HR, or SGA, our Investor Relations Advisors. Good day.
Thank you, sir, and the members of the management. Ladies and gentlemen, on behalf of Angel One Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.